Hello, my friends. I'm Rocky Outcrop. This is Bitcoin and Ethereum technical analysis coming right at you without any FOMO or greed. If I just make myself nice and small here, and before we run the intro credits, I wanted to give a shout out to Harsh, who got in touch with me after yesterday's Bitcoin episode to say this on the Discord to me. Yesterday's BTC analysis was pure gold, and you're welcome. I hope everybody else benefited from that as well. Let's dive on into the charts and take a look at where we are today. So welcome back, friends. Thanks so much. And if we're looking at the CME chart here, which I have up behind me right now, I'll just make it full screen actually and zoom on in a little bit. You can see two bluey colored bar things here. One of them is a measured move that we have on the charts, and the other one is, of course, where the price action itself actually ended up going. First off, we came in and we pretty much got the textbook style 60% one, and then straight after that today, what we've seen happen is we've gone up and got the full measured move, and in fact we're even beyond that currently. Let's see if we can figure out anything about the prices right now, taking a look at them together. What Harsh would have been referring to, by the way, was the chat we had probably about this ascending triangle and everything else that we talked about. It's really lovely to wake up to check your messages and see that first thing that somebody says to you in the morning at 8 o'clock is that the gold analysis yesterday was gold. Well, that's lovely, isn't it? We still are on for a measured move here. Let's just see, did we get it spot on in terms of what we're talking about? Yes, we're doing that right now. Well, let's see then. Is this going to be a top for today? Will we get a pullback or not? You know what, actually, before we kind of go into the analysis thing, I might as well just express a couple of, well, first off, actually, I've got a severe migraine at the minute, if you're wondering why my tone's a little bit different to the average episode. So I'm talking a bit quieter. But also, what's my opinion? You might be wondering what my opinion is right now on the things that we're looking at. And I have to be honest, you know, I'm of the opinion that we're going to be seeing a pullback at some point fairly soon. You know, I really do think so. But we've not seen that quite yet. Let's kind of just zoom on in and take a look at what that dynamic is looking like at the minute. Because if I go down to the 4-hour time frame and bring up the oscillators from down below, spread them out a little bit, we can see here that I was talking recently about the divergence on the RSI, and I talked about how we had this downward sloping trend here that we seem to be following. And I kept saying as well that, you know, there's this other little dynamic here when it comes to this divergence, and that is that every time it goes down, you know, effectively it becomes slightly easier to burn it off and boil past it so that there isn't any divergence on there after all. And what we're seeing right now is that kind of happening. That effect is going on just here with these latest highs. Now, how this really went down is that we were looking at the prices and saying, you know, we're in an uptrend, but we keep seeing this downward sloping movement here. They've got this downward slope. Now, of course, there's two ways of looking at divergence really quite often as well. Well, there's more than two ways of looking at divergence, but let's just break this down a little bit here on the RSI. If we have this divergence that's coming in at these tops, we have this divergence coming in at these tops here, and it also looks like this down below here on the charts with a little odd sort of spike outside of the zone, but really in general we're looking at a wedge. Then you could anticipate perhaps, you know, a measured move outside of this pattern, taking us up almost to where we are now. Almost, you know, further than where we are now. But if we use the 60% sort of a rule here, then we're looking at having come in and kind of done that just now with this move up the way. So there was always a chance of this kind of happening, you know, and this was cautious about the thing. We've had high after high after high in an uptrend, and we have to admit that their trend is our friend, and that's what we follow along with until we're told otherwise. And we're told otherwise by doing things like coming in and actually putting in lower lows. There's a few then interesting dynamics that we can follow on from that lower lows discussion point then for here, and that is if we look at our low that we got since the move up into the 12, past the 12K area. So we're in the 11Ks over here, then we moved up into the 12Ks here. Now, of course, we're up in the 14Ks. So if we were to take a Fibonacci retracement then from our low that we had, bearing in mind then this discussion about lower lows and whatnot, we've not had a lower low since over here at all. This is why we can take it from all the way back over here up to our current highs. And we can see a couple of things then off the back of this, that, for instance, a retest of this wedge formation here, coming back down towards the low 14,000s, would simply be a retest of the wedge, and we'd still be above the 236 Fibonacci retracement point there at that stage, should we do that. And that dynamic then, what that leads into is us able to look at this downward sloping bearish divergence here on the RSI. It was on the stochastics as well, and say, well, quite clearly, look, we can now come back down and retest this wedge over here as well, and potentially put in a low, but still haven't managed to overall burn off the 4-hour bearish divergence that we see there. If we go towards the 24-hour time frame, then how does that kind of tie together, and what are we looking at just now? Well, if we put in a local high in this area and pull back down the way, then we will actually have bearish divergence here on the daily time frame. So how does this kind of match up with how we looked at things in August, just looking back the way? Because of course there's a couple of points to be made here about this section of price action, namely, first off, that this is what we can really consider to be our bearish divergence on the daily time frame, as opposed to everything over here with this wedge and everything else. So I'll just get rid of that wedge from there. I do apologise, by the way, for the migraine and not being able to be my normally much more vibrant self than I am right now. I honestly can't speak loud. Every time I speak loudly or anything, it makes my head go, boo. Right, okay, so looking over here, you can see that we're still divergent between these two highs, which is kind of interesting as well. Now, so there's that point to be made, and there's this point to be made as well. And this is a little bit of fun more than anything. It's just a little sort of fractal type idea. Now, I don't like fractals, as you know, if you're a frequent watcher of the channel. But I just wanted to put this movement here into the context of what we're seeing just here, and look at the sort of the differences between it. How about we take a fractal move from, say, our low running up to when we came back down again. So the 2 points here between the orange upward sloping support line. How about that? And we pop it onto the charts. A bars pattern thing, they're calling it. So they're really just like between these two areas. It's a lot higher than the price is. That's what I'm looking for. Anyway, pop this on somewhere around about here, kind of get it to match up more or less with the impulse up the way. And you can see that we're actually even further on beyond, in terms of these movements, how we came along here. Sorry about the alarm outside. It affects me more than it affects you, believe me. Yes, we had this high come in here, and relatively speaking, had we done the same sort of a move here, it would have taken us up towards these highs of 14,500, which made sense, and before seeing a pullback. Of course, I don't like fractals, like I'm saying, but that would make sense in terms of if we were going in for another higher high and it still turned out to be bearishly divergent. Let me just remove this so I can bring the points back together again. On the 4-hour time frame. Maybe I should have done that fractal effort on the 4-hour time frame instead. Yeah, probably should have. Apologies. Just drag somewhere from here to here and give me that and stick it over here just so you can see what I was really trying to get at. Stick something in like this. What are we going to call it? Something like that. So say we'd come into these 14,400 area targets. I've not got that lined up perfectly. It's good enough. And then pulled back. What we'd have been looking at in terms of this 4-hour time frame would have most likely have ended up being another dose of bearish divergence, as we were looking at the charts, in the last yesterday, and saying that we could have then had another case of this and then seen a downward turn as a result of the bearish divergence alone. Instead, ultimately what we've done is broken outside of this wedge, moved move towards the top side, got a textbook 60% measured move off of the back of it, then we could still be going up further. And if we do, for every time we move past one of these points, such as moving past 77 on the RSI and moving up towards the overbought territory, then we're looking at having taken out yet another one of these doses of bearish divergence, leaving us ultimately in store to probably end up still being bearishly divergent compared to the highs that we had on the 21st of October after our initial impulse up. So the story is not radically different to the past. It's just it's pushing on past here now into these points where you start to look at things from a different perspective, like a parabolic move type perspective and stuff like that. As we're seeing these real big highs come in, so I wouldn't be surprised to see a pullback. And if we did see a pullback, then I would also not be surprised to see continuation should we not pull past the 236. Should we pull past the 236 and take out this wedge and everything else again, then of course I could expect to see pullbacks maybe as far down as 13,500. And then we can reassess everything that's going on here. A few other things that we can look at as well in terms of these 4-hour time frames, like this strength of trend that we have clearly towards the top side now after this period of choppiness, where we had crosses of the positive and negative DIs, but we didn't actually see the strength of trend coming in there to sort of support that throughout. Now we actually do, and that chimes together with what we were seeing in terms of the bearish divergence here and the confusion in the charts as we were looking at them. Now, if you could sum up my episodes over the last wee while, it's been kind of distinct to the highs that we saw over here in August. When August, I came in and says, look, quite clearly it says that we're seeing a reversal here, most likely, and it was very very, 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 very clear about it. Up here, it's slightly different, and that's been why over the last couple of weeks I've been putting out a slightly more difficult to interpret message. Now, of course, Harsh himself understood it perfectly and was able to benefit from it, and I'm sure most of the Rocky Outcrop who watch along also did. But if you were at all confused by it, that's understandable, because I was doing that on purpose. I wanted people to be able to become comfortable with trading in the face of counter trend analysis, while relying on the trend as your friend aspect of things to kind of carry us through. And we've seen that happen. With this move up the way. What is the most bearish thing right now then in terms of the markets in general? Well, there's a few. Over here up towards the Bitcoin dominance chart, we've had our full measured move off the back of this wedge. So this can be our first port of call. Let's just grab a stick here, pop it up. You can see it's a bit bigger, but you can see I've also measured it badly. So we've come up here and we've had like our full measured move off of this wedge. So there's that, which could signal that there'd be the potential for a pullback. We also can see over to the left here that we filled in this gap which is very much sticking out at us like a sore thumb. I don't know if you ever noticed this yourself on the CME, on the, what do you call them? Bitcoin dominance chart, but there's a gap in there, and we filled that in. So those are the sort of the most sort of bearish aspects of things in terms of like, could we see a pullback from this point here? Yes, we could. Now, obviously, it depends on what form that pullback takes. So this is just simply the Bitcoin dominance chart. So we could be well served by looking over at some of the other things that we've been talking about recently, such as Ethereum as well. So looking at Ethereum, we've got this diamond formation. Whether or not it's accurate or anything doesn't really particularly matter, to be perfectly honest with you. This top side looks like it's drawn in a little bit kind of skewy, cutting through too many. Gosh, give me it. Too many bodies and whatnot there. So we've come up towards the top end of this diamond effort. We previously pushed down into the lower sides of it, and you can see that it's on this time frame doesn't match up very well with the 24-hour time frame. So the bottom side's also a little bit dodgy. Whatever, doesn't really matter. The point being is that we're still within this structure. In fact, I'll hide the diamond off there because I only put it on there to give people an idea about how there's two sides to this coin. So I'm just going to take that off. what we see here is that we came in and we've put in a high here, followed on from this high just afterwards, which is higher. Come in here and put in a lower high than we have so far. And over here, you can see that this sort of matches up with the left-hand side. So what you do have here on Ethereum is a head and shoulders showing up on the RSI. Well, it looks like, potentially there's a head and shoulders-esque movement on the price action, which comes in at around about where this wedge is as well. So if we were to break down past this zone, then we could, of course, be looking to a measured move off of the wedge, which is this stick here. So that could take us all the way down to something like 314, and that would be incredibly bearish in terms of the overall dynamics of the market. So what you'd be hoping then, I suppose, would be to say that perhaps where the money opportunities lie at the minute are in trading within this wedge itself, where you could be looking up to 426 or so. And then if we did push on past that to go then up towards these other highs, and of course the way this is shaping up at the minute means that we would be taking out our previous highs if we did that. Now, of course, we'd also have to look and see, would we have divergence and whatever else on the go should that happen. But there we have it. We're pointing towards the top side in terms of stochastics, so we can be positive about this in terms of the 24-hour time frame. In terms of the 4-hour time frame, not so much, having come in higher here than our previous high and seen a turnaround in the stochastics here, which matches up with the price actions convergent. But you could organically think maybe we've got a different move around about the place. Oh, seemingly I've also left some trading opportunity thing on here. Suppose I could talk about this. I'd never do this on the channel, but I've got a migraine here, and here we are. I was just kind of looking at this yesterday at some point and thinking, what would be the easiest move in terms of just a simple trade in terms of 5-to-1 risk to reward ratio effort. And well, I suppose it would probably be, either way round here at this point. You've got a short move where you can manage your risk quite effectively in there. This was actually, I drew this on yesterday, so you could see that this was, when did I draw it on? I drew it on a while ago. So those candles weren't quite like that at the time. Yes, anyway, the other clear move at the minute in terms of managing your risk and everything else would be essentially the same but equal opposite type move. Looking here at a move up towards the top end of this thingamajiggy here, and managing your risk in around these sorts of areas. Where's my ratio there? About 5-to-1 there as well, 5.5-to-1. So something in around about this sort of idea between these two zones, and that makes sense. It comes in around about our 400 area, taking profit around about 420. We've spoken about these things so often. I use the numbers normally. Don't bother drawing that thing on normally. Don't think I would normally have to, but might as well just to give you that visual idea, which is always in the channel anyway. It's always on the show anyway. Or else, of course, this move here. Now, depending on how this pans out, that will kind of feed back into the Bitcoin one potentially in terms of showing us, the way. If we see upward movement, of course, that's kind of convergent with the markets. There could be, explosive growth over here as well. Or we could see this being the dead dog, just the wet dog, kind of stinky pulling down the overall industry from one of our highs at the minute. So this does mean that we have to look up towards this, the 15k area. Can we push into 15k and do some other moves, or will we be kind of stuck here in the meantime? A few other things that we can then look to in terms of the shape and everything else of this section of price action. I'll go into the 4-hour time frame to make this slightly easier for myself. Wedges often turn into, this was kind of like a wedge, by the way, remove that, often turn into channels. So we're kind of at the minute outside of the range of that. If we were to have a channel on there, I'm just using a fib channel just for ease of access because I had the button open already. we're up here towards this top end. So if we're able to continue this on the way, then great. Otherwise, you've got a few targets towards the downside. 14,600 being the 236 on this fib channel. 14,447 thereafter is your first target if that's the case. 14,312 is your next target if that's the case. 14,177 if that's the case. And as you can see with all of these, that would simply be a higher low. In fact, when we put in this previous higher low over here at 13,538, that was coming in at where we can now see is the 618 golden pocket off of where the Fibonacci now lines up to. So another move down towards this area then would put us in danger of taking out our previous lows, which is an interesting thing when you consider that of all of the 618 retracements that we've had along the way so far, none of them have really been coming in as lower lows. And a lot of these moves down the way have been 618 retracements from Fibonacci's drawn in towards the highs. Like over here, 618 retracement, for instance, didn't take out our previous low, go down towards this area, 618 retracement, here we are, didn't take out our previous low, go down to even this one over here, when we had a more than 618 retracement, we didn't take out our previous low. So if we were to go for a 618 retracement again here today, following on from this price action, what we're looking at is actually taking out our previous low potentially if we do it. So that's a target for us anyway in terms of an inflection point and where we could see wicks coming in and support if we see a pullback. And then in terms of percentages, because we've moved on so much, a movement down towards that area is a 10% pullback in the prices. And of course then that would be enough perhaps to give this another chance to reset some of the oscillators down below and give us another chance at coming in without divergence. Now of course what we've done so far in terms of this divergence story is we put in one higher high. As these were coming down lower and lower and we're seeing more and more bearish divergence on, technically it became easier to push past this area. But now that we've pushed on up the way, because we've kind of come as extended as we have, we clearly took out the bearish divergence of these 2 points here ages ago, and we're now coming in here and asking questions about this one. But we may still end up seeing that there's bearish divergence between this last major high in terms of this structure. If I just hide all the drawings, you can see easier. We've come up here, up and down. There was a more significant retracement from this area than some of the others. This is a big high. We can then compare between these 2 points and say that it's divergent. Now we're still coming in for some of that divergence. So that's interesting, and I suppose we can cut that down the middle by talking about the 12-hour time frame therefore, and saying that while we've come up here and everything's been good, we still have this divergence on the go here. What does this look like compared to the previous one? Well, it doesn't really look like a local high. We had no follow through there afterwards then to call this positive and not divergent compared to this previous peak here is pushing things when it comes to the 12-hour time frame. Therefore, it leaves us with some of that still on the go. And in terms of the 24-hour time frame, well, it's very much clearer in terms of this divergence picture here. So you'd have those two things going hand in hand. And if we do see a pullback like that, then of course I'll be back to talk about the technical analysis along the way. You just know about it all in advance as ever. And put the drawings back on here and show you how this has been doing. This is, the story goes on. We're working our way down and down and down towards these targets. We talked about them ages ago. We're already down at 27. We've had more than 10% move from all we've been talking about at the 30s. I gave away all the answers to this thing for trading between these two pairs for ages now already. Regardless of the overall movements in the Bitcoin pricing, you've been able to trade between Bitcoin and Ethereum in the face of even a Bitcoin decline in price and still increase your Bitcoin capital. We were talking about this throughout the show, throughout the episodes. I mean, I don't make it so explicit as that, but like I say, migraine today. That's the reason why people should subscribe as well, because I deliberately don't make things explicit so that when you make these realizations yourself, they're your realizations as opposed to something that I spoon-fed you, in which case you've learned something and you'll be able to remember it going forwards, and that's the key. I could talk a lot more about things like Ethereum. We've not done anything major yet. I've already expressed where we are in terms of the two pictures that we could be looking at and how you'd be able to play them as well with extreme clarity. So this episode's lasted for a bit longer, much longer than I intended it to. Nice little discussion about things with regards to the current price setups. that we're looking at. And let me be very clear again, I'm looking to see things to push on into the 15Ks and to keep on doing things and to talk about things being parabolic to try and take out this bearish divergence here and come up towards higher areas on the daily time frame, or else we ain't. And that's kind of what that boils down to. And that's my chat on that one. See if we can get past 40 here on the DI at the ADX. As you can see, things looked here at this point, there's this inflection, like we could see a turnaround. And it made perfect sense to be taking shorts off this as well, if you were, to be honest with you. You could have played this either way. You just would have had to have stopped out and whatever, no big deal. This was looking like it could have, there was elements about this which have been refreshed as a result, I suppose, of these goings on just now and the uncertainty that remains in the market. Now we're seeing that translate through to a big move. Is it going to continue? Well, that's the question. Will we become purely parabolic and go for those 20Ks or not? And does it have anything to do with this? We will see with time. Thank you so much for tuning in. I'll catch you next time.